Namaste and welcome. I am Pratim Ranjan Bose and you are watching my podcast, Perspective. In this episode, I'll discuss the Union Budget 2024. Globally, the job of a finance minister has become exceedingly difficult in the post-COVID world. Both Russia-Ukraine and Israel-Hamas wars created huge strain on the world economy, and one flash here or there can turn all calculations upside down. The strain is visible all around us. The US economy is weak, but the US dollar is strong. China is pumping billions and trillions of dollars to boost its domestic consumption without much tangible results so far. The job of the Indian finance minister is even more difficult. She can neither keep printing money at the support of petrodollar, nor does she enjoy the backing of the historic trade surplus. Yet, she needs to make high allocations to capital expenditure to create the growth multiplier. And at the same time, she must adopt the US-style cash handout program to boost employment. Finance Minister Nirmala Sitharaman did both. It is not clear to what extent employment will pick up due to the incentives to the employers. Primary problem lies with linking incentives to Provident Fund enrollment, which was necessary from the transparency point of view. Majority employment in India takes place through MSMEs, and in the absence of the labor code reforms, such employments are mostly created on contract outside the purview of the Provident Fund. Either way, it is a developing story, and we have to wait and watch to see how things unfold. The internship program in top 500 companies is a good initiative to remove the skill gap as identified by the economic survey. The government promised to reform IIT education, which was, of course, an ongoing agenda, that is to impart necessary skills which are required in the present day. I think they should consider treating the apprenticeship program of large companies as deemed IITs. The FM had to recover part of the cost of the rupees 2 lakh crore scheme coupled with a high capex through taxes. The capex was announced in the interim budget before the election, and that capex level, the projection which was given for the year, is maintained. So, which means capex is high because it was increased substantially. But the tax base of the economy is still small compared to its size due to low share of formal activities. The finance minister was right in offering some relaxation in personal income tax under the new rules and reducing the corporate tax on foreign companies as part of the agenda to attract FDI. She was also right in promising rationalization of GST rates, which she, of course, has to do in consultation with states, and withdrawal of the angel tax. The toll of all these went to capital gains, to the disliking of investors, including me, particularly smaller investors in mutual funds. Both the short and long-term capital gains are increased. Capital gains come quite heavy on the middle class, who form bulk of India's thin layer of income taxpayers. Taxing the post-tax income at higher rates is not a good idea. The government must reconsider this decision. There is usual politicking about budget, but a closer look will reveal that the budget towed the line set by the economic survey and indicated a set of policy reforms which will be declared in due course of time. Land digitization and consolidating labor data are two major policy initiatives that will help industrialization and labor law reforms in a big way. Much of the land acquisition and compensation related problems arise in India due to lack of clarity on ownership. Land related disputes form bulk of the cases in civil courts. In the longer run, GPS linked land data will therefore help reduce the pendency of cases in lower courts. Simplification of FDI rules is much needed. India is capital scarce. We need foreigners to set up factories for value chain integration and boost to exports. All these will ultimately boost employment. If one iPhone can give nearly $10 billion boost to Indian exports in such a short time, imagine the impact of attracting 10 more companies of the size and repute of Apple to India. Interestingly, the FM said that the FM policy will emphasize rupee trade initiatives. It means that the government will incentivize or may incentivize countries which have high positive balance with India to trade in rupees and invest part of the surplus in India. We were already pursuing one such mechanism with Russia. The economic survey stressed on attracting FDI from China as part of the value chain integration. Should we ask China to invest part of its huge trade surplus in Make in India? The rupees 1,000 crore venture capital fund in promoting startup activities in space technology is a good step. Space is going to be a major industry in India over the next decade. Partnering with private sector in R&D of small modular reactors in the nuclear power segment is in line with Narendra Modi government's sustained initiatives to invite wider participation of the private sector. The government has opened many doors which were once reserved for the public sector and thereby increased the indigenization. The finance minister reduced import duties on a wide range of critical minerals, which are linked to the growth of semiconductor, telecom, renewable energy, and electric vehicle manufacturing in India. Rest assured, each of these sectors will see wider investor interest. Finally, I'd like to congratulate the finance minister for reducing import duty on gold from as high as 15% to 6%. More than the growth of the jewelry industry in India, it will save border states like West Bengal from the ill effects of smuggling. International smugglers are using Bangladesh to smuggle gold to India. Good part of it comes through West Bengal. This had given rise to a huge cartel with involvement of local politics, which is only natural. A Bangladeshi MP involved in gold smuggling was recently killed by his cartel members in Kolkata, the capital city of West Bengal. Thank you for watching Perspective. If you like this episode, please share and subscribe. See you next week. फिर मिलेंगे.